Bitcoin just can't catch a break right now is how we feel. After last Friday's massive flush, the market dropped again this week, with Bitcoin hovering around $103,000. The charts look very shaky, I know, and the sentiment's even worse. Everyone seems to be asking the same question, and that is, why does Bitcoin keep dipping? Have we broken away from the 4-year cycle? What's going on? Is the bear market here? Is the bull market over? So this is what we're breaking down today, because behind the fear and the headlines, something unmistakable, something historic is taking place. And this volatility we see, it's part of a larger reset. It's the flash, you could say, before the next phase begins. And remember, this cycle is different than the previous ones. And I know everyone always says it, but I really believe it's true this time, because all you have to do is look out the window, look at the headlines, look at the news, and you see never before in history have so many nations, countries, institutions, funds. It's unbelievable, unprecedented, and there's just no way this could be happening without a bull run, parabolic run. And that's what I believe. It just looks different, as I was saying, and that is because the new kids in the playground are the institutions, and they're dipping their toes. So they, in many ways, I believe, are rewriting the rules for Bitcoin's bull run cycles, and we will take off once they really take off, is what I believe. But anyway, back to what's going on in the market recently. We were just saying that it is brutal. These times have been brutal. I know I'm not undermining them, but these times also test your patience and your conviction and force us to ask the question of, what are we even doing here? Because investing and being subject to the stock market and geopolitical forces and affecting our investments, that's rough. And unless you're capable of withstanding that and knowing what you're doing, you are not standing on a solid foundation, and you will be blown around like a tree during a hurricane. And it does require you to stay very grounded and know what you're doing, know what you're holding in order to make it through these times. Anyway, that's exactly why my team and I come to you Monday through Friday. We bring you the best research we find, the top insights, so that you can be prepared and you know how to weather the storm. Because Bitcoin is still Bitcoin. Bitcoin is king. It's going nowhere, and your top blue chip tokens are also incredible investments you should not be selling during these times. Anyway, so let's take a look at what's really going on. So first off, I think it's important to refresh our minds with what has recently happened to Bitcoin, to the crypto space, and to all of us this last week. For starters, we know Bitcoin's flush last week wiped out billions in open interest, forcing over-leveraged traders out of the market, which ultimately may be a good thing. And then we saw, just as the dust started to settle, we got another dip, a follow-through move that dragged Bitcoin back towards the low $103,000 mark. But remember, these kinds of pullbacks serve a purpose. They clear the field, they shake out excess leverage, they shake out greed, and these times make room for stronger hands to step in. It's as they say, pride comes before the fall. And it seems to be some sort of law of nature to wipe something out when it gets too frothy or too greedy and bring things back into neutrality. And for Bitcoin and crypto, this means handing it over to stable, strong diamond hands that understand Bitcoin and its intrinsic value that even extends over into securing world peace. I've gone into this theory before. Let me know if you haven't heard it. Perhaps I'll make a whole video on this. Anyway, moving on, we see the data backs this up. We see funding rates on Binance just turned negative again. And when traders start to stay short, it usually means the crowd's leaning too bearish, meaning they don't think the market's going to go up. And oftentimes, what actually ends up happening is opposite of what everybody thinks. Anyway, historically, when this has happened before, it's been close to a local bottom. And if we zoom out, this price action starts to look less like a collapse and more like a market reset before liquidity rebuilds. And if we zoom out even more to take a look at the macro picture of things, we see that regional banks are flashing red again. And this time, the weakness looks broader than ever. Over the past few days, stocks tied to Western Alliance, Bank of California, and East West Bancorp have all fallen between 7 and 10% in a single session. These are mid-sized institutions at the core of America's credit system, the ones that finance small businesses and local development. So when they start losing double digits in a day, it's usually a sign that liquidity stress is building beneath the surface. We saw a similar setup before the 2023 regional bank scare, and now this same pattern is beginning to echo again. All while at the same time, bond markets are sending a clear signal as well. We see the 10-year Treasury yield just dropped below 4% for the first time in more than a year. This kind of move doesn't happen in a vacuum, in a silo all by itself. It means big money is crowding into bonds for safety. And when yield falls this quickly, the market is effectively calling the Fed's bluff. Rate cuts are no longer optional, but imminent. And if we take a look at the FedWatch tool, it confirms it. Traders are now pricing in 100% probability of a rate cut this month. This would mark the first real step in a full pivot towards easing. Wall Street already knows it too, and capital is starting to reposition for that shift. Meanwhile, the US M2 money supply has quietly climbed to an all-time high of $22.2 trillion. That's a record amount of cash circulating in the system, proof that liquidity is already expanding before the Fed officially cuts rates. The floodgates are opening, but the flow isn't evenly distributed yet. It's pooling in the places that feel safest until confidence returns. And every time this pattern has emerged in the past, banks under strain, yields collapsing, and policy easing around the corner, capital begins migrating toward real assets. We covered this in yesterday's video, but we know it moves into gold and then it flows into Bitcoin. It's the same liquidity rotation we've seen in every late cycle phase over the past decade. And all the pieces are lining up again right now. So let's zoom in on gold. It's now trading around $4,300 an ounce, officially crossing into a $30 trillion market cap. And across Asia, people are lining up outside bullion shops to buy coins and bars, a clear sign of euphoric behavior. Because when retail investors start rushing into an asset that's already gone vertical, it usually means the move is nearing exhaustion. And we see the same pattern in crypto, right? Once the market is at like an all-time high, it usually means it's about to cool off, right? So we're seeing the same thing with gold, which means that liquidity will then and should move over and roll over into Bitcoin and then the rest of the crypto market. So this is when opportunity tends to shift from defense trades like gold to performance assets like Bitcoin. Raoul Pal's banana zone model shows this rotation pattern again and again. Gold peaks first, then Bitcoin begins its next leg higher. And right this moment, right now, we're sitting at the same 90 to 100-day window between gold's breakout and Bitcoin's next surge. So while headlines are celebrating gold's rush, the quiet setup forming beneath could be the spark for Bitcoin's next wave. And if we take a peek behind Bitcoin's technical setup and picture, things look strong. Julian Bittel, one of the top macro analysts in the space, has shared charts showing Bitcoin forming a broadening wedge pattern, a structure that's historically been a bullish setup. And he also points out that Bitcoin's Bollinger Bands are at one of their tightest levels in history, something we've only seen a few times before explosive rallies. And when the bands get this tight, it means volatility has completely dried up. The market's coiling like a spring. And when that tension finally releases, it usually leads to a major move. Each time volatility compresses like this, it marks the calm before the breakout. And the crypto quant bull run dashboard still shows 0 out of 30 peak indicators triggered. So this means the cycle is nowhere near overheated. And if we pull all of this together, we connect all the dots between the wedge structure, low volatility, we're seeing negative funding rates, and a neutral macro positioning, it's clear to see you get a setup that looks primed for the next move higher. This phase doesn't signal the end of the rally. It's the market taking a deep breath, like a wave that pulls back before it comes rushing back in. And the fear and greed index just plunged to 23 for stocks and 22 for crypto, down from 64 only a week ago. So you can see that greed, that froth has settled down. It's been wiped out. So this is one of the fastest sentiment drops we've seen this year. And historically, extreme fear tends to appear right before markets find their footing again. Meanwhile, institutional sentiment tells a completely different story. Coinbase's investor survey shows 67% of institutions expect Bitcoin to trade above $130,000 within the next 6 months. So while retail investors are reacting emotionally, professional investors are treating this fear as a buying window. This divide between fear and conviction has always created opportunity for those who know how to look through the smoke. Extreme sentiment readings like these often mark the end of a correction and the beginning of the next accumulation phase. So even though we see short-term traders panicking, the foundation beneath crypto continues to solidify and strengthen itself. California recently passed a bill allowing the state government to custody Bitcoin and other digital assets, which is incredible because this means the world's fourth largest economy can now hold crypto directly on its balance sheet. And at the same time, Arthur Hayes is raising 200. And at the same time, Arthur Hayes, who has been infamously correct many times, not every time, but many times on his predictions, calling the top or the bottom, we see right now he's raising $250 million to acquire small and mid-sized crypto companies. So moves like this, when they happen from insiders like him, means they believe the next phase of growth is upon us, is very close. And on the Ethereum side of things, treasuries and ETFs now hold 12.5 million ETH, roughly 10.3% of the total supply. Tom Lee, head of one of the largest Ethereum-focused digital asset treasuries, or DATs, projects that 2025, this year, will be the year Wall Street starts building directly on Ethereum's infrastructure. And that's the next layer of adoption, not speculation, but a full-scale integration. So while the headlines focus on fear, the builders, funds, those who really know, the institutions, they are quietly preparing for the next liquidity wave. We have to expand our horizons in crypto to think like long-term investors do, like those that run these pension funds, because they are running this bull run this time. Let me tell you, that is what's happening. So we have to be on their timetable now. We can't be so short-sighted. Anyway, as we wrap up today's video, remember every cycle brings the same moment. Fear on the surface, strength underneath, and that's exactly where we are right now, except the players playing with us are much bigger this time. We also see that gold is euphoric right now. Banks are under a lot of pressure. Liquidity is expanding and Bitcoin is quietly rebuilding its position and momentum. This kind of environment always rewards the patient. Volatility doesn't mark the end of a market. It clears the path for what comes next. And once this phase plays out, the recovery usually comes faster than anyone expects. So if you have been feeling uncertain this week, remember, this final flush is how the system resets before it moves again. And when it pumps again, remember there will be another correction, but it still doesn't mean it's over. Just remember the market is alive and it has to pull back every once in a while to reset for its next leg higher. And I believe Bitcoin is going higher, higher, and higher still. That said, the groundwork is already being laid. And once momentum shifts, guys, it will catch most people off guard. The reset is already in motion. Stay ready, stay hungry, stay plugged into the news. I love you guys so much, and I'll catch you guys here on Monday.